Bandhan Mutual Fund presents MF Corner.
Hello and welcome to the special edition of Mutual Fund Corner on YouTube. And today what we're going to be discussing is going to be a very interesting topic in terms of asset allocation, gold-based investing. How is that going to be working out? Which assets should you be looking at? Gold, mutual funds, equities, gold ETFs, how is that also coming in? And that's what we'll be talking about today. And to talk about that, we have a very special guest joining in with us. We have Saravanan S, who is the director at Purplepond Insurance Brokers Private Limited, joining with us to talk to us and take you all through all of that. Thank you so much, sir, for joining in with us on the show. It's a very special edition. What I want to talk about and start by talking about is just in terms of investments that are there, gold-based investments specifically, given that, you need those safe haven investments at time, how does that come into play? What are the available options in India right now? If we could start with that.
Yeah, thank you. Thank you for having me on the show. Gold has traveled with Indian growth story for the past centuries. So if you take gold as a asset class, we have been using gold as wedding gifts, and gold has been used as a saving for rainy day. If you look at gold in India, the households have at least 30 times the gold reserve, official gold reserve Indian central banks have. So that is the kind of emotional attachment Indians have to the gold. Gone are the days when the people invested in gold through gold jewelry. Now we have smarter ways of investing into gold. We have 5 different ways of investing into gold. You can invest in physical gold through gold coins, gold bars, or through gold ornaments. The second method of investing could be through gold ETFs, which are daily traded on the stock exchange. The third method and the most efficient way of investing into gold could be through sovereign gold bonds issued by Reserve Bank of India. The fourth method could be through gold savings mutual funds. And the fifth could be through the digital gold offered by digital platforms. These are the 5 different ways we can invest into gold.
Absolutely, sir. These are the ways that one could look at investing into gold, but asset allocation also becomes very key, right? In such an important time right now, when you see that volatility coming in, how is it that one should be allocating their assets, whether you look at mutual funds, debt funds, or even in terms of gold? What is the allocation that one should be looking at? What is the apt one to, have not that much risk and a decent return?
Yeah. See, if you look at including gold in one's investment portfolio, it again is going to depend on the individual's risk profile and the goals for which he is going to accumulate gold. On the investment portfolio, including gold, it diversifies the portfolio. Gold is an unrelated asset class when compared to equity and bonds. So with the uncorrelated asset, the portfolio becomes less risky, or the risk diminishes because of the diversification. If you look at the amount of gold one should include in the investment portfolio, normally people talk about 5 to 15%. But again, this depends on one's risk profile and the ultimate goal for which he or she is investing into gold. A 10 to 20% investment into gold can be a very good allocation for the yellow metal. And if you look at increasing the allocation to gold, gold is also a volatile asset class. The popular belief is gold does not vary in price. No, gold is also a equally volatile asset class. So increasing the gold allocation, your portfolio value will during volatile times.
Yeah.
Decreasing the gold allocation, you will lose on your diversification of the portfolio. So 10 to 20% of the portfolio allocation to gold can have a balance between risk and return.
Absolutely. So 10 to 15% should be gold. What is, in terms of any words coming in for mutual fund and debt mutual fund as well, 10 to 15% we keep aside for gold because that saves you from the volatility that you're seeing. What about equity and debt mutual fund?
See, nowadays you have a combo pack, like you have multi-asset funds where debt, equity, and gold are part of the hybrid funds. These category of funds are called multi-asset funds, where gold also forms a part of 20% of the total portfolio. 45 to 50% is in equity, 30% is in debt funds, and 20% is allocated to gold funds. You have a combo pack. You can either invest through this multi-asset funds, which give you all exposure to all the three, or individually you can have allocation to equity 40 to 50%, 30% of the allocation can be to bond funds, and 20% can be to your gold funds.
Right. What about in types also? We do have gold ETFs as well, right? Exchange traded funds. How does that look as an option for a mutual fund investor? Does this also make sense? Hybrid is something, obviously, you have everything combined. So, saving on that time, and when you don't have enough to understand each one separately. But what about gold ETF?
Gold ETFs are very smarter way of investing into gold. And most of the millennials love this way of investing into gold. See, gold ETFs are basically traded on the stock exchange. So you will discover the price, or you will be buying the gold units at the prevailing price at the time you transact on the stock market. So basically you're buying gold at the price at which it is being traded. So it's easy. You will have to have a demat account. You can buy and sell gold in the stock market during the market times.
Okay. So, a quick word. How important is it for an investor who's just starting off, maybe to understand, this asset allocation? What is so much of an importance that one should be giving to this part of the strategy, especially a mutual fund investor?
Now, I'll give you an example. If you look at during the COVID period, 2020, equity as an asset class corrected by around 36% in 23 days, March 1st to March 23rd. If you look at these very tough times, whenever there is a unrest, whenever there is a geopolitical tension, whenever there is an unprecedented economic downturn or something rare occurrences like COVID, the safe haven, people call it a safe haven, the price of gold appreciates. That happened during COVID also. If you take the year 2020, the gold price appreciation was around 23%. So if you have invested into gold, you are actually mitigating the risk of your portfolio, where equity has gone down by 36%, but your gold has gone up by 23%. So allocating to gold does stabilize your portfolio during tough times in the market, during economic downturns, or during the socio-political unrest, or during the geopolitical problems in the border.
Absolutely. So, important thing is also gold, right? And investors should set their goal before they start investing. Whether I want it for my retirement, whether you want to pay it for your children's fund or school fees. Now that those expenses are also quite high, how important is goal-based investing? And does your strategy of asset allocation change with your goal?
Sure. The goal, if it is going to be for higher education, and if the parent has decided to send his or her son to higher education abroad, gold is a dollar-denominated asset. So if the dollar appreciates, or if the rupee weakens against US dollars, it is always better to be invested into gold, which appreciates along with the dollar. That can be one way you can look at investing into gold for higher education if you are trying to do the expenses in dollar terms. That is one way of looking at it. If the goal is 15 year plus, 20 year plus, or if you're looking at retirement, probably you are comfortable with investing into equity and debt. If it is purely a vacation type of goal, you are 100%, you can take a chance with your equity investing, and you can concentrate your goal on equity portfolio. But if it is for something like retirement does have a asset allocation need. You will be better off investing into a hybrid category, which combines debt, gold, and equity.
Okay. So very long term retirement, then you should go for something like an hybrid. That's the word coming in. So debt, gold, equity, everything comes in the mix. Maybe higher education, then gold, because yes, you are seeing it dollar based. So yes, maybe that is something that could work out. And if it is medium term, decently long term, 15-year plus, then equity, debt portfolios, mutual funds is something that one could look at. That's the word, right?
And if you look at a goal like marriage, and any family which is planning to gift gold as the marriage gift, our tradition is to give a pot of gold to the daughter. So that being the goal, it is always prudent to start accumulating over the years small tokens of gold, so that during the year of marriage, you can just redeem all these gold units and purchase gold, irrespective of where the gold price is.
Absolutely. So just one question, last one that I have, especially in terms of mutual funds and, gold together. Like you mentioned, hybrid fund, right? But if I'm looking at a mutual fund strategy, right now, should one have multiple mutual funds to achieve their goals, or maybe stick to one portfolio? What is it that, you would suggest?
So you can look at, mutual fund schemes, you have different categories. In our opinion, LMS, you can follow LMS, say large cap, mid cap, and small cap. If you can have two schemes from each of the category, the 6 funds should suffice to meet all your goals. So large, mid, and small. Essentially, you are trying to invest into 500 companies of India. So the top 500 companies can do the trick for you in accumulation of wealth required for meeting all your goal requirements.
Okay. And so just one last word, especially in terms of SIPs. Is SIP a better option if I have a long-term strategy? For mutual funds, yes. Is SIP the best option, whether I'm going for hybrid equity, no matter what? Would SIP be a better suggestion if I have a 15-year view?
Wherever you have equity embedded into the portfolio, equity is a volatile asset class, averaging is the best way to achieve your results. So if you have an equity element in your scheme, always go through a SIP route, so that you will get the advantage of averaging, because equity as an asset class has always been volatile.
Okay, sir, thank you so much for joining in with us, talking to us about allocation strategy, asset allocation, and especially in terms of gold ETF, and mutual funds. What is the strategy on a goal base that one should also follow? So thank you so much for that. Thank you so much for joining in with us on this special edition.
Thank you. Thank you for having me in the show. Thank you.
Bandhan Mutual Fund presents MF Corner.